Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is going to be for Wednesday, December 11th, 2013. We had a distribution day today coming on the heels of some fairly negative internals from the previous day. But when all was said and done, we didn't do a whole lot of expansion to the downside. We did have negative advanced declines on both sides. New York trend closed bearishly, and the VIX was up 42 cents on the day. Taking a look at the ES futures, 2 of our 13 exhaustion in place still. We still are hovering above on the north side of the 10 EMA, so we've yet to return to that short-term negative bias that would change that secret exhaustion warning into a sell signal, so we're still waiting on that. Resistance to the upside clearly remains 18.1250. To the downside, we're going to have key support at the 10 EMA, and then better support below that once we get into the gap and close this gap window that is open right now on the ES chart. Moving on to the NASDAQ futures. NASDAQ futures today were, I guess, relatively more strong than the ES on a technical basis, just because we closed above the open and had a little bit of a better day of holding up here. You can see that we've got more distance above the 10 EMA in the NQ futures. The other key feature is that we're still just hovering below the risk level here from the secret exhaustion warning at about 35.16. So that's going to be definitely the level to watch to the upside. To the downside, the 10 EMA at 34.82 is going to be your next important level. Looking at some of the other futures, let's take a look at some different asset classes. The Dow Goal futures were the mini gold futures were very strong today, pivoting to the upside, clearly breaking above the 10 EMA decisively. We closed above the zero race level at 1250, and if we get a tick above today's high, we're going to turn this chart to short-term positive. Keep in mind that if we do turn short-term positive, we're going to have first resistance at the 50 DMA, which is about 1289, 1290 or so. Oil futures also had a fairly positive day. We're kind of into that area that we had expected to kind of grind here a little bit. We're just kind of pinched between the 50 and the 200 DMAs. We're only 6 days up in the seeker exhaustion phase here of the first wave. That's the momentum phase. Those are the green numbers. So if we get up into this 4/8 level and are approaching 8 or 9 in the count, we're going to have some resistance there. But for now, certainly the trend remains short-term positive, and we do have this fresh seeker exhaustion buy down here that the chart is making good on now. All right, so here's a look at the Dow Goal Ratio. This is important as far as maintaining a risk-on, risk-off profile for the market. Right now, we're starting to see some risk coming off here in the market because we're seeing this ratio go down when traders are trying to put on risk and happy to assume more risk, thinking that the market's going up. We're going to see this ratio rise, but right now we're starting to see this start to roll to the downside. We're going to find some key support here at the previous high in this ratio, but if we lose that, we're going to definitely be in line here for a change in character, which would be a more defensive posture being assumed by market participants. All right, so taking a look at the S&P TLT cross, one of our other key risk-on, risk-off metrics. We're starting to see a little weakness develop here. We got up back into this regression channel, but weren't really able to take it. So right now it's acting as resistance and starting to repel the risk-on process. Starting to see a roll down here. This doesn't really get critical until we lose this level right here. If we lose the 1720 level in the ratio, then we're going to probably be setting up for a lower high being qualified here and potential rollover. So this is something we're going to need to check in on a little bit later on in the week to see if we are starting to change character here in this risk-on, risk-off metric. All right, now moving on to take a look at the individual sectors. Clearly, the best performer on the day was the XAU. All the other important sectors were down. SOX, the BTK, and the BKX also all suffered losses today. So definitely a classic risk-off day in the market today. Let's move on and take a look at the individual sectors ranked from best to worst. All right, so here's a look at the sectors ranked from best to worst. The XAU, definitely the big performer on the day, up more than 4%. The consumer staples were fairly strong. Housing index was stronger than the rest of the market. Moving down to the losers, the utility index was the biggest loser. The OSX was also fairly weak, and the transportation average was also weak. So having the transports and the OSX buried so far down in the relative performance rankings is definitely not a sign of strength for the market. All right, so here's a look at the transports. Transports are still feeling the grips of this 13 bars up in the seeker, potentially closing down below the 10 EMA. Need a little, if we get a little follow through here and break out of this lateral range, we'll get a little better clarity and some more resolution. Oil services made a new low close on the move and actually closed for the first time below the static trend line. So we're going to wind up losing the static trend line. This static trend line will stop projecting forward since it's been lost on a closing basis. We are short-term negative here. We're only 2 days down in this new seeker momentum phase, and we're just started our first bar down on the exhaustion run here to the downside. That's the red candle. XAU, certainly the good performer on the day, pivoting decisively above the 10 EMA. Looks very similar to the gold chart. Going to have some resistance here at 87.50, which was essentially this breakdown area, which previously was this double bottom. But being so fresh in the momentum phase of the count here, only 2 bars up, we could easily continue higher and interact with the 50 DMA and possibly the static trend line. Semiconductors were kind of middling today. They weren't very positive. Just kind of hanging up here in this weird little formation above the broken risk line. So no real new development here technically, just kind of boxed up and winding up with power in the semiconductors, the stocks. Broker dealers today, getting a little bit further into this little pattern here. We had this little bit of a retracement that held above the 8/8 level at 150, but right now we're kind of grappling with this double top. We do have the potential to still break out above that and get above that previous level before we run into trouble from the exhaustion count of this trending phase of the seeker right now. All right, here's one final chart. This is the XOI. It's a little bit broader than the OSX and definitely includes more of the actual producers rather than just the service companies. Bringing this up tonight because we did this 9-bar run to the upside that terminated at the 8/8 level, which kind of really makes sense. You know, we're 9 bars up in the momentum phase of the seeker into the 8/8 level, so you'd expect some good resistance. We've rolled back down here. Just finished 9 bars down today. So we did hold above the 50 DMA, so this is a potential pivot point. If we pivot to the upside, we're going to definitely target this this active static trend line that's coming in at about 1493 or so. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.